Welcome back to Dummy Boy Finance. I'm Dummy Boy, and right now I'm going to be talking about Nokia stock because there's been a lot of hype in regards to a short squeeze. And so I want to go over the chart and I want to explain to you guys that this stock might not have the type of run that you guys are expecting. And so right now we're looking at Nokia on the weekly time frame. And as I disclosed in my last video on Nokia, we have been in a wedge for over a decade. You can see right here, we have treated this trend line as a line of support. And then once we broke down into this channel, we have not been able to break through until a few days ago. And so what exactly happened a few days ago? If I zoom this in onto the hourly, we can see that we broke above this decade-long trend line. We broke above this 655 line of resistance, but we closed the day off underneath that line of resistance. And now today we are trading back under this line of resistance in our decade-long wedge. And why does that look bearish in my opinion? The first thing that I can just see immediately off this chart is a head and shoulders, this being the head, these two being the shoulders. And then at this point, we would see more momentum to the downside. The second reason is there is a gap to fill here at around 420. So that would also play well with the head and shoulders pattern. And so because of those two reasons, I am bearish in the short term for Nokia. And then also simply because we got rejected by two major lines of resistance, and now we're back in a pattern that we've been in for over a decade. So those of you who are in Nokia stock or wanting to get into Nokia stock, this line of resistance that relates to our 10-year long pattern has to be broken, has to be back tested, and we have to be sitting on top of that line. If we're below that line, I am bearish on Nokia. As soon as we break above this line, I become partially bullish. I say partially bullish because we've been rejected multiple times by the 655 line. And so if I zoom out onto the daily time frame, I can show you guys here that this 650 line of resistance has been pesky for a very long time. You can see I can go further down the line, but even since 2013, you can see it was treated as support, it was treated as resistance, and then most recently, a couple days ago, it got rejected and we sat right under that line. And then you guys know what happened. We broke back into this channel. And so as of right now, if I'm looking at Nokia, I'm looking at fundamentals, I'm looking at the short interest, which is not really that significant, and we're looking at the volume, I don't think Nokia is that play that you should be focused on, especially if you're trying to play it for a short squeeze. This is not the stock for you. On a technical basis, we have a head and shoulders developing. We have a gap to fill at 420. We got rejected by two major lines of resistance, and now we are trading in a decade-long pattern. And so all of this is just my opinion. You guys can do what you want to do. I'm just trying to help you make a more informed decision if you are trying to get into Nokia. These are the lines that we need to break, and right now it doesn't seem like the best setup to get in. And so if you guys like this video, don't forget to like. We are on the road to 10K subs, so if you made it to this point, feel free to subscribe. This is Dummy Boy Finance. I'm Dummy Boy, and I will see you guys in the next one.